Hi and welcome to Debt Tale. This is Rebecca Bautista and this is the Banking Basics fourth video all about money market accounts. So we'll be going over what are they, pros and cons, things that you need to consider, and what's a good use case for them. So let's get started. So a money market account is a hybrid between a checking account and a savings account. So think of like the best features kind of put together. A money market account allows you to earn interest on your balances similar to a savings account, but you also have check writing privileges and debit card access like a checking account. So money market accounts, also known as MMAs, can also be referred to as money market savings accounts, so MMSAs, or money market deposit accounts, so MMDAs. Those three terms all mean the same thing. But I need to mention that a money market account is not the same as a money market mutual fund. Those two things are different. An account, whether it be called savings deposit or just account plain, is a type of savings account that you can find at banks or credit unions and are FDI insured for $250,000. A money market mutual fund is a type of investment, and therefore it is not secured by the FDIC. So money market accounts tend to have higher initial deposit requirements as well as higher monthly minimum balance requirements. Some banks may have monthly maintenance charges as well as potential check writing fees or extra withdrawal fees. Let's talk about pros to having a money market account. One is safety, which is the fact that it's fairly low risk. Your money is at a bank and FDI insured, so there's no chance of losing more than what you've deposited in. It's different than, say, putting it in an investment account where it can fluctuate based off of the value of the shares. Here, your money is sitting in a bank and just getting extra interest added on top. It's very flexible in terms of how you access your money. Many money market accounts have a debit card, so you could swipe. There is check writing ability, and you can always do an ACH transfer. Having different ways of easily accessing your money makes it beneficial to cover, say, an emergency, and having the ease of transferring that money to wherever it needs to go tends to make things a little bit less stressful. Higher interest rates. Well, you're not just letting your money sit there and get nothing. You are getting some interest attached to it, and it can be more comparable to a CD. Cons? Well, a lot of money market accounts for banks will have a amount of money that is the minimum to open up, and this could be in the thousands of dollars. So if you are a new time saver, you may not have thousands of dollars laying around. Another con could just be the interest rates. So money market accounts do have generally higher interest rates that are offered than, say, a standard savings account. However, the higher interest rates sometimes are reserved for very large balances, and you may not have large sums of money to reach that tier. Another con is fees. Not every bank has these types of fees attached, but some do. There may be a monthly maintenance fee. There may be an extra withdrawal fee. These type of things are particularly prominent with this type of banking product, so you want to just make sure you are paying attention. And the last one is withdrawal restrictions. Remember that earlier I said a money market account is like a savings account and a checking account combined, like a hybrid. One of the things it also pulled over from a savings account is the Regulation D 6 withdrawals a month limitation. Now, this has been postponed again for COVID-19 purposes, but a lot of banks are still holding true to this, so you may be limited to only 6 transfers a month. That means money coming out of the account. You need to keep this in mind in case you are planning on using it more like a regular checking account. So not all money market accounts are created equal. Some do offer check writing ability. Some do offer a debit card. You want to make sure that you are looking into the fine print. There are some that offer a debit card but not a check, or you can get a check written out of it, but it's just an extra fee. So those are things you need to take into consideration. As always, you need to shop around. There are different banks out there that offer different money market accounts, as well as just check with your own local bank that you use or your credit union. Other considerations are monthly deposit requirements. Some may place that you need to keep depositing new money into the accounts. Another consideration is just a monthly maintenance fee, and of course, how much do you need to deposit in the first place in order to open up the account? So the common uses for having a money market account are for an emergency fund, as those tend to be thousands of dollars, especially if you're aiming for 6 months of income. You can also use it to save up the down payment on a house. You could use it to save up money for buying a car out in cash. Those usually are big time purchases that will take thousands of dollars. Some people use it for their house maintenance funds, so that's to cover in case their HVAC unit goes out, their boiler, etc., a new roof. Again, these types of repairs that can generally take thousands of dollars, having that money in a money market account usually is a higher interest than having it in a regular savings account. That's really it about a money market account. I hope you found that useful. If you have any questions, please leave a comment below. As always, happy to help. If there is any other banking topic you want me to cover, please let me know and I'll be sure to include it in this series. Now, this is video 4 of the Banking Basics series. Above, you'll find the one for checking accounts. There's one for savings accounts and one's about the CDs. Hope you have a good one. Bye!